Hello and welcome to Tax Matters on this occasion of Nigeria's 51st independence anniversary. Like the Your Masquerade of Lagos will say, I rejoice with you, I rejoice with myself. You can see that we are donned in Nigeria's colors. We've done this ever since we started this program on the yearly occasion of Nigeria's independence anniversary. And it gladdens our heart that a group of patriotic Nigerians have launched an initiative to promote the Nigerian flag. Let's heed their call. Love Nigeria, your country. Respect the Nigerian flag. We also want to thank God Almighty that despite the plans and the intrigues and the plots of our detractors, Nigeria has survived. What's on today on this episode of Tax Matters? We are going to be revisiting self-assessment. Self-assessment for companies' income tax filers. But before we do that, let's fill you in with happenings, with news in the world of taxation in Nigeria. On Thursday, September 15, 2011, the Federal Inland Revenue Service took its now popular public engagement with its public a giant step further by hosting existing and prospective contractors and consultants to an interactive session intended to improve the efficiency and effectiveness of the procurement function of the FIRS. The interactive session took place in Abuja and was hosted by the Executive Chairman of the Federal Inland Revenue Service herself, ably assisted by coordinating directors and directors of the service, including the Director, Procurement Department, Mr. Peter Henner. In her opening remarks, the Executive Chairman had this to say.
The benefits of this program at this point in our relationship with you, our partners, cannot be overemphasized. In the course of working together, we have observed that 1, there's need for more tax education and awareness on pertinent tax issues, such as the operations of the tax clearance certificate, withholding tax, the tax identification number, and the value-added tax, to mention a few. That's extremely important because first and foremost, one needs to realize that apart from the fact that this is important for you as businessmen, regardless of whether you're working in the Federal Inland Revenue Service or elsewhere, it's important to know that that as the tax authority of the nation, we need to first of all lead by example. And those things we expect other organizations to do, we should be the starting point. This interactive session is the first of a series of meetings that the service intends to hold with stakeholders in an effort to operate an effective, efficient, and transparent procurement process that does not compromise extant laws and regulations of public procurement. I'm sure a lot of you here, if not all of you here, perhaps will be seeing me for the very first time. In terms of procurement in the service, our deliberate approach, at least my approach in the process of running this organization, is to let the process run. And for me to come in and intervene only when there are problems, when there are issues. And so the only time really I expect to see contractors is when you believe we have not followed due process and you have the evidence to show for it. And I do hope, therefore, that not just do you use this particular forum, but also in the future, that you also use this opportunity to ensure that we improve on this process going forward. It will be recalled that this era of procurement began in 2004 and crystallized with the passing of the Public Procurement Act 2007, which aims at promoting competition, transparency, accountability, professionalism, and value for money in the award and execution of procurement contracts. I'm aware that since 2007, we've practiced this act and therefore given us enough time to also look at ways in which we can even improve on the act. And I hope that in the course of today's meeting, we'll give feedback to the representatives of the Bureau here on areas in which the Act may need attention. And let me give you one, because again, this has also come to my notice. Some have argued that for them to be able to do business, they need more than a 15% advance payment. And the truth of the matter is that there's really nothing we can do about increasing that percentage, because 15% is what is actually ingrained in the Act. And if we think we need to improve on that advance payment, then it's important that we put in whatever we can to amend the Act so that way it achieves a suitable level that augurs well for you as businessmen.
The following day, Friday, September 16, the Federal Executive Council, at an extraordinary meeting, among other things, gave express approval to the Federal Inland Revenue Service to recover 170 billion naira in tax arrears and debts from tax defaulters. Honorable Minister of Finance and Coordinating Minister for the Economy, Dr. Mrs. Ngozi Okonjo-Iweala, explained that the decision to back the FRS to recover the debts was one of the ways the government will raise revenue and block leakages. Dr. Okonjo-Iweala said that out of the 170 billion naira, 22 billion had been fully agreed upon by both sides. Dr. Ms. Okonjo-Iweala also said that the government would not hesitate to publish the names of defaulters in national newspapers if they fail to pay up immediately. In another development, the University of Lagos has hosted a 2-day workshop on the challenges of payroll, pay-as-you-earn, pension and NHIS administration in tertiary institutions in Nigeria. Organized by Unilag Consult and the Tax Planning Support Services, the 2-day workshop held from the 21st to the 22nd of September at the University campus in Akoka, Yaba, Lagos. The Executive Chairman of the Federal Revenue Service was ably represented at the workshop by Mr. Innocent Ohagwa, Regional Coordinator, Lagos Island Region of the FRS, who delivered the keynote address on her behalf.
This workshop is in alignment with the expectation of national tax policy with respect to the contributions of tertiary institutions to the development of taxation in Nigeria. It should also be noted that Federal Revenue Service has recently initiated the endowment of professional chairs in selected Nigerian universities for tax lecturers with the aim of deepening tax education and research capacity in the country. In addition, there is a special youth organization named Student Tax Advocacy Initiative, STAI, founded by FRS, which is operational in secondary educational institutions to foster a positive culture among the youths. I therefore see today's seminar as part of the organizers' contribution to tax education and enlightenment with specific attention to tertiary institutions.
Also in attendance was the Executive Chairman of the Lagos State Internal Revenue Service, Mr. Babatunde Fowler, who delivered a paper on resolving payroll tax disputes between universities and tax authorities and between universities and staff unions.
If you go by the Constitution of the Federal Republic of Nigeria, it says that all adults who earn an income or make a profit have to pay tax. But apart from that, we're guided by tax laws and regulations that are the same nationwide. But we've had a situation whereby the practice in each state has varied, and that has led to some confusion among the tax authorities and also the university employers and the staff union.
Representative of Tax Planning Support Services, TPSS, Dr. Abiola Sani, encapsulated the rationale for holding the workshop in these words.
To an employee, any deduction from the payroll is regarded as a tax, whether or not it is so. And this is logical because any deduction whatsoever, for whatever purposes, whether public or private, is a deduction, is a reduction of a take-home that does not take them home. So, in workplace, payroll managers are always regarded as wicked and vindictive. In some cases, people go and make trouble with them after seeing the impact of deduction on their payroll. What do we mean by taxes? Are all deductions taxes? For example, if there are deductions in my paycheck for union dues, for ASU union levy, for cooperative association, for my electricity, are these taxes? So certainly, we need to make a distinction between these payments, which are demanded for different purposes, and payments which are demanded by government as part of our civic obligation.
The Federal Inland Revenue Service introduces the tax card to make all tax payment easy for you. Just follow these 7 easy steps. Obtain your taxpayer identification number, TIN, for free at any FIRS office. Get your tax card from your bank. Log on to www.firsonline.com, then register to obtain a password and access the payment process pages. Fill your TIN number, tax type you're paying, amount payable, and period of payment. Confirm the entries on your transaction. Then print your e-ticket and present at any FIRS office as an evidence of tax paid. It's that simple. For more information, visit www.firs.gov.ng or any FIRS office close to you. FIRS, it pays to pay your tax.
Welcome back. The program is Tax Matters, and the issue of the day is self-assessment. Self-assessment for complex income tax filers. Self-assessment was introduced in Nigeria in 1992 and became mandatory in the year 1998. In recent time, there has been a renewed emphasis on self-assessment as against government assessment. It has become so well emphasized that the Federal Inland Revenue Service established a project team headed by a director. In looking at self-assessment, we want to begin by finding out from those who should know, tax consultants, what indeed they know about self-assessment.
The FIRS has been talking about full implementation of self-assessment. Is this in any way new to you, ma'am?
In 1991, Nigeria saw the wisdom, in joining other Commonwealth countries and other countries that have embraced the system of self-assessment. So in 1991, by virtue of the budget speech of the head of state at that time, it was announced that Nigeria was going to embrace self-assessment. So since that time, self-assessment came to be born, and the law was passed later to give effect to the changes introduced by way of self-assessment. So when the company's income tax was amended, it's now Section 55 of CITA. That is the provision in the tax laws that talks about self-assessment. Likewise, in the personal income tax file, we have a similar provision, I think Section 41. I think Section 41 talks about self-assessment. But it wasn't, it's not as detailed as we have it in the company's income tax side.
So self-assessment is not new and should not be new to anybody. Of course, it's the first option for any taxpayer. And with full implementation of self-assessment, more revenue will accrue, because taxpayers will pay willingly. And of course, even we consultants will be in position to assist in the tax collection. And I can assure you, it will increase the tax collection and base of the Federal Inland Revenue Service.
Okay. If I'm your client, a company self-assessment filer, what does it entail? What am I required to do to fall in line with the self-assessment regulations?
Normally, we'll ask for your audited account, and then based on the audit report, we'll compute your tax payable and your exemptions and allowances, so that we'll determine what is payable to tax and you will pay.
Who does that computation?
The tax consultant will do it.
Are they saying something new to you?
No, it is not new. It is not new in the sense that by the time you are submitting your account, you have already assessed yourself that this is the tax you are paying, this is what you are due to pay. Mm-hmm. But if after the submission, the tax authorities now discover that you have under-assessed yourself, now they can ask for questions. Then you can be able to answer that. Because since you have already assessed yourself, you will know your income, you will determine your income. So you can now assess that, this is the tax I'm supposed to pay. So if there's any question from the tax authorities, you can be able to defend. You can be able to prove your case.
Okay.
What does it really entail to fully comply?
The process is just after you have your account, your audited account, then you have a tax practitioner to compute what is supposed to be your tax liability based on the audited account. When that is computed, then you raise your draft and you go and pay to the authorized banks. You take your payment to the FIRS, you are issued a receipt, and then you can submit your application for tax clearance certificate.
Okay, so if I'm your client, a company income tax filer, what does it entail to fully comply with the self-assessment regime?
Well,
put your records in order, you prepare your returns. In other words, you are saying you are doing a self-assessment. This is what you are putting forward. This is what you want to pay in terms of assessment based on your records, based on the results of your operations. So you put this thing forward, and then all the associated benefits, advantages, like instrumental payments and so on and so forth. You take full benefits of all these things. And then they're also giving you the benefit of the doubt. It's not a government assessment as it used to be, but it's a sort of honor too, that you are putting something forward on which you want to be assessed upon. So it's a benefit, it's an advantage to the taxpayer.
There you are. We can safely say now that those who should know what self-assessment is. And so now, from the project team leader of self-assessment, what is new? Why the renewed emphasis?
We have always heard about self-assessment. At times people say, what is different? One of the things different is that it's a regime, it's a continuum. It starts somewhere and it ends in another place. I think we all have a good idea of what it is, but specifically that the burden of assessment rests on the taxpayer. It's the taxpayer's responsibility to assess himself and also pay. Would I say it's even a constitutional requirement because it's part of the civic responsibilities of every citizen. Before this time, it was the duty of the tax officer to assess the taxpayer. And you will all recall the complications that came out of it. Either assessment notices were not properly served, or people evaded service of assessment. And in such cases, tax revenue was at risk. And because of that, globally, a new tax regime was designed, and that is self-assessment, placing the responsibility on the taxpayer and therefore removing that obstacle which created so much. It led to litigations, it led to waste of time and all the delays. So the paradigm shift is that the taxpayer does not need to wait for the tax official to issue the notice of assessment, and for the tax official to note that although he was doing it before, that something has changed, that you want the taxpayer to assess himself and ultimately working towards voluntary compliance. And there are key assumptions about self-assessment tax regime. That is that the taxpayer is in a better position to know his business circumstances, knows how much sales he made, and knows everything about the business, the profit. And even before that, this time, the taxpayer had to render the accounts before the revenue assessed. Now that the taxpayer has to assess himself, it means you have a kind of partnership between the revenue and the taxpayer. With that, it appears there is a bit of confidence or a lot more responsibility placed on the side of the taxpayer. There's an assumption that the taxpayer is honest. If the taxpayer is a stakeholder and also a beneficiary of the tax revenue collected, it means he's a stakeholder just like the tax officials. So you make that assumption of honesty. Of course, at the end of the day, because you have bestowed so much trust on the taxpayer, the revenue will then stand somewhere to make sure that there's a strict enforcement. Then going to self-assessment itself, and why we say it's a regime, in the sense that you have more or less divided it into two, the enablement side and the compliance enforcement side. In between, you have all manner of features. Because you have surrendered the right to the taxpayer, the revenue has a responsibility to make sure that the the taxpayer understands what to do in terms of interpretation of the law, in terms of quality services and all that, because you will have a better case if you have explained all the circumstances, all the faults, all the rules in the law to the taxpayer before imposing penalties. After you have empowered the taxpayer, you are left with the operational aspect of it, which I think that's where we focused on, to the exclusion of other areas. The processing of the tax returns, right from registration, contact with the taxpayer in the office, we were quite busy with that. That's the operational aspect of it, which is more or less the tax compliance angle, trying to look at what the taxpayer has done. In continuation of the continuum, you now have the proper tax enforcement area, because you have empowered the taxpayer, told him all what to do. You now have an obligation to check at the operational level. And if for any reason the taxpayer failed to abide by the rules, it means that without fail, you just have to impose the sanctions. There will be no question of waivers on compassionate ground and all that, as I hear all over the place and all that, because you have done what you are supposed to do, enable the taxpayer. You've given the taxpayer all manner of support, and at the end of the day, the taxpayer failed. If you do not impose the sanctions, you will end up not leaving something in the memory for the taxpayer to remember the next time. Then you have the new issue of risk assessment. People say, what is new about self-assessment? Risk assessment is new because it leads to a risk-based audit. It's going to be risk assessment because this taxpayer is assumed to be honest. So you are not going to audit him by rule of the thumb or by any arbitrary method or through mere referrals. You are going to try as much as possible to be scientific because of the nature of risk assessment, because nobody is sure who will be caught. There will be no way of influencing the case selection. That in itself elicits voluntary compliance. So that's one important thing about risk assessment. And we have information management and all that, because if you are running a risk-based system, you must also have a robust intelligence outfit that informs you from time to time what is the reality on ground, so that those who draw the parameters for risk assessment will be better equipped to do so.
Okay, so self-assessment is not exactly new in these shores, but then now we know that the tax authorities at the Federal Revenue Service are now more resolute, more determined to enthrone full self-assessment in the polity. That is all we can take today on that topic, but do watch out for a follow-up on subsequent episodes. Before we go, let us fill you in with happenings, upcoming events. On Thursday, the 29th of September 2011, in Abuja, the Federal Inland Revenue Service will make history by launching commemorative stamps in their bid to promote voluntary tax compliance among Nigerians. And the Joint Tax Board is 50. Yes, the Joint Tax Board is 50, having been established in 1961 by virtue of the Income Tax Management Act of 1961. And to mark that 50th anniversary, the Joint Tax Board will hold the second in a series of international conferences. The first one was held in 2009 at the Yar'Adua Center in Abuja, and so the second one will take place between Wednesday the 5th and Friday the 7th of October 2011. It is strictly by invitation. Tax intellectuals will come from all over the world to rub minds with equally cerebral tax consultants and tax administrators from within and outside Nigeria. If you are not there, Tax Matters will be there and will serve you blow-by-blow account in subsequent episodes of the program. We want you to have a blessed week and we thank you for watching.